Hey, it's Clay at claytrader.com. This will be my top 10 stocks as we head into Friday, February 10th. This will be a technical analysis breakdown. So if you are someone that uses charts within your trading, or maybe you're just interested in learning more about charts and how they can be used as a tool to help make good decisions as a trader, this will be a video for you. Real quick, a couple of clarifications. Number one, the price you see over here will be changing, and the candlestick you see right there will be moving around. That is because the market's still open for a small amount of time. I like to do these videos when the market is still open because sometimes we can capture some really interesting late day price movement. And then second, I'll be using the 30-minute time frame, meaning each one of these candlesticks represents 30 minutes worth of time. So stock number one here, HPCO, and what a just explosive move here. Earlier on in the day, you had this bull flag pattern that had formed, and then you got the breakout right there and has just been going straight up ever since there. But at the core, what's going on is what we as traders care about the most: volatility and a whole lot of volume. And really, that's what a watch list is all about: to find unique, to find interesting situations, and not randomly rush out and buy anything, but to watch it. And that's what we have here. A lot of volatility, a lot of volume, which in and of itself makes this a unique situation, particularly in regard to the price range down here below $5. Now, is there any sort of setup right now? Not really, not from a breakout standpoint. Now, for those of you that like to play pullbacks, and a very interesting pullback area sits right there at about $3.40. But if you like to play more so breakouts, then yeah, you're going to have to wait for some sort of pattern. So again, it's worth watching. I'm not saying this will occur, but let's say the price maybe comes down here and behaves like that. So yeah, there's a bit of a pullback. Well, what would you have? Well, you then have a situation to draw another bull flag, which is, what this move occurred. So again, am I saying a bull flag is going to happen? No. My point here is that when you have the volume, when you have the volatility, it's worth keeping an eye on because another pattern could in itself, play out and then take shape. But again, if you do just like pullbacks, well, then you already have that situation here with a potential area at 340. But overall, if you like this price range, you like volume, you like volatility, keep an eye on it. Next, SLQT, and fantastic mover. Drew this pattern in play previously, and you can see today is finally where the pattern was broken. This breakout happened on huge volume, and you can see from there, fantastic move up. Yeah, there was a pullback, but this is where a little bit of perspective comes in. What do I mean by that? Well, if you're some sort of day trader, flipper, scalper, or whatever you want to call yourself, and you bought right there and your plan was to buy and sell within 22 minutes, well then yes, from that perspective, the chart looks really bad. However, now why does it look bad though? Well, because yeah, the price did pull back today. There's no doubt about it. This downwards channel formed. But the other side would be, well, maybe you care about the bigger picture. And as part of caring about the bigger picture, well, you're going to ask yourself, well, okay, yeah, fair enough. There's a downwards channel right now. But what was going on before this downward channel? And there is this big old move up right here, which again, and why I put this back to back, we have ourselves another bull flag pattern. So bull flag, yeah. Overall, the chart is completely fine. Once again, fully realize if you're a day trader and you bought right there, you don't really care about the bull flag. But again, that's why I'm trying to preface that I'm making that statement based on the assumption that you care about more so the bigger picture point of view. So again, if you like this price range, if you like bull flag patterns, keep an eye on it. Next one here, TSLA Tesla. Another move here, higher highs and higher lows as it continues. Granted, there was a pullback, but again, same general idea that we just talked about. Yes, for the day trader that bought right here, that wanted to buy and sell within 22 minutes, chart's looking really bad. But assuming you care about the bigger picture, everything is perfectly fine. I do want to do a little house cleaning to get rid of this level and then this level down here as they serve their purpose for now. But the first big update that comes into play is just based on a foundational rule in charting, which states when levels of resistance are broken and closed above, you want to see them act as support. So if you are some sort of pullback player, then the 203 mark, of course, is not a guarantee of anything, but it is this former area of resistance. So I don't think anybody would be shocked if the price came down there and it did find some support at that level. In terms of newest areas of resistance, in my mind, the level to watch, and I think probably the trend line that a lot of people have put into play is that resistance trend line right there. Whoops, let me get rid of that too. So once again, from a pattern standpoint, resistance, support, nice upwards move there. Let's put the golf ball down here a little bit, make it more visual for you golfers. And in this situation, we have ourselves a bull pennant pattern. Both in the grand scheme of things, again, yes, today there was a pullback. But when I do that, it seems almost kind of silly to get too hung up on that, assuming you're not a day trader that bought at the high or something like that. But overall, just basically have a bull pennant and a very much and very clear overall uptrend. Next one, Google here, GOOG. And what another just train wreck of a day. Yesterday, you had this bear flag post, and then today was just the breakdown and continuation of that bear flag. And I point that out because not exactly, but in some senses, you have something very similar. You have a bear pennant that is now formed after today. Now, let me be very clear. And the same goes for a bullish pattern, but just because something's bearish pattern-wise does not mean for sure guaranteed the price is going down. Same bullish. Just because there's a bullish pattern doesn't mean the price is going up. But would it be shocking? Would it catch people off guard if Tesla decided to just continue on down? No, absolutely not. Once more, does not mean that it's going to occur, but it wouldn't catch anybody off guard. But that's also why this level here, in my mind, from a support standpoint, at $94, very, very important, because it's essentially the bottom part of that bear pattern, where if it breaks, then, logic would, say that, okay, you're not crazy to think that all of a sudden selling pressure could show up, because you got to think there's probably a bunch of longs that have their stop loss down below that area. So there's, again, no guarantees, but there's a lot of credibility and rationale that could go behind thinking that a break of 94 could create more momentum to the downside. As far as areas of resistance are concerned, though, key level to watch going to be right there around that level, which puts the breakout point right around $95.50. But yeah, no doubt about it. As of now, things are looking pretty rough for Google. Next one here, AMC, and the bleeding just continues. Talked about yesterday how the price, things weren't looking great, but at least you still had the price hanging around that 200 period moving average, that pink line there, which is a very key level in the world of charts. But you can see today that level was broken. I mean, that session, just one red candle after another after another. To be fair, this last 30 minutes here, good, solid green candle. You can't take away from that. But there's definitely a whole lot more work that now needs to be done. Going to go ahead and get rid of that. So if this bounce does continue, which again, nice bounce, last 30 minutes, first key level resistance to watch now is going to be 567. And that's just once again coming from that idea that when levels of support are broken and closed below, they tend to act as resistance. So that'll be the first key level of resistance if that bounce continues. As far as levels of support are concerned, got to squeeze things down here a little bit as we're having to go further back into the chart's history. But key level of support now to keep an eye on moving forward. Going to be right down there at, let's see, what is that? The $5.07 mark. And then that would, whoops, it's behind my ugly mug. Oh, no, it's not. No, it's not. My ugly mug is so ugly, it's confusing me. But next key level after 507 would then be 495. In fact, if you just wanted to call that a support zone, I don't think anybody would really offer up much of a pushback on that. So 200 period moving average, key level of resistance, and then you have the support zone down here. Real quick, wanted to take a break and personally invite you to get signed up for this free live online training that I'm offering. So if you've been enjoying what you've seen up to this point and you want to learn more about this tool, how it can and should be used to build consistency, to manage risk, then definitely get signed up for the free live training. Now, one special note, because it is live, then I get it. I have 5 kids, so maybe you already have something on your schedule this evening, or maybe you're watching this Friday morning and you completely missed it. Well, go ahead, send me an email, clay@claytrader.com, and after the event's completed and I get it uploaded, then I'd be happy to send you a link where you can still watch it. But if you can make it live, then get signed up. There's a link down in the description box if you're watching on YouTube, or if you're watching on my site, there's somewhere right there on the webpage that you can click to get signed up. But either way, get a hold of me, either get signed up or drop me an email. Next one, WLDS. And like this one, because it's pulled back quite a bit. So when you have these situations, at least what's been eliminated is the worry of, am I suffering from FOMO, right? Fear of missing out. That's been alleviated, right? The people that suffered from FOMO, they were the people that were buying right there. Now, don't get me wrong, just because you're not suffering from FOMO doesn't mean that it's going to be a guaranteed trade. But I'm just saying that the pullback in and of itself is something that has allowed for the chart to present itself in a much more, kind of risk-controlled way. That doesn't mean that it won't be a losing trade, but like I said, it's not like you're chasing the price or anything crazy like that. So as far as levels to watch moving forward, from a resistance standpoint, the level that stands out to me is that area right there. And then from a support standpoint, key level to watch if this thing does pull back some more, it's going to be down there right around the 80 cent mark. So if you like these sort of situations where there are bigger pullbacks, but you like penny stocks, keep an eye on it. Next one here, ticker symbol GMBL, and same general idea, although I will admit that this pullback here has been even deeper. But what I find fascinating, and maybe you find this fascinating, not at all, and that's fair enough, but there is this trend line here that the price does seem to be respecting. So from a risk-reward standpoint, now, of course, this does assume that you're disciplined, you have stop losses, you're going to honor those stop losses, all that good stuff. But I can see the rationale, the logic, if you like penny stocks, of, hey, you know what? Is it going to bounce right here? Because if it does, and even if it bounces even modestly compared to what was being risked, you could be looking at a whole lot of good upside potential, once again, relative to what was being risked, but that is operating on the assumption that you will be disciplined and honor a stop loss. So if you like to play penny stocks, if you like to play these ones where the risk is low in the sense of if it does crash to the downside, well, you're taking a small little disciplined loss. But if you do get any sort of bounce at all, you could be looking at a very interesting situation. Then I definitely keep an eye on this one. So again, if you like penny stocks, if you like kind of trend lines and those sorts of trade plans, this one would definitely fit the bill. Next one, SOUN, and this will mean a bit more to those of you that have watched past videos, particularly when I put in that green trend line right there. But I mean, you just can't make this stuff up, and I'll turn that into a quick plug. Get signed up for the training or just send me an email. But check this out. Big move today. Price broke up through that level of resistance and then has pulled back and pulled back and pulled back. And oh, look, right where it started to go sideways, right? Not only at that purple line, but the purple line happened to also be the, same value of that green line right there, and you're finding some support. So again, same general logic here, just not a penny stock. So I don't want to repeat myself anymore, but what I just talked about on GMBL in terms of trendline bounces, risk reward, all that sort of stuff certainly would apply here. So like I said, if you like that sort of mentality, but you don't like penny stocks, then you have a different choice with this one. Next one, CVNA, and at a very, very sketchy location, right? Not really anymore. It's broken down through it, and that's the main dynamic here, is that this area of support at 1250, which up until now had done a good job holding there, and then even throughout the course of the day held, but this last 30 minutes, you can see the price is now separating down through it. So that level I would definitely consider as being broken, so I'm going to go ahead and get rid of that for some house cleaning, which now brings about which you've heard me say before, when levels of support are broken and closed below, they tend to act as resistance. So if there is any sort of attempted bounce back in the upwards direction, $12.50 will be the key level to watch in that regard. But as far as if this downwards momentum continues, really next key dynamic that you got to think a lot of people will be watching, so potentially self-fulfilling prophecies with this area, is going to be that pink line, which on my chart denotes the very, very famous 200 period moving average, currently valid at right around, let's just call it $10.35. But yeah, today, not a good day, not necessarily because it broke and, had a red day, but because it has now broken down below that low right there. So it's just a question of, is this a start of now even more downside pressure, downside momentum? Let's see how it goes on Friday. Next one, TQQQ, which is an ETF that follows the NASDAQ. So if you believe that the NASDAQ market as a whole is going to rise, this one will also rise. Big difference, it just allows you access at a much lower price point. So because today the NASDAQ had a rough day, so did this one. And I'll tell you what, this trend line here, again, will mean a little bit more to those that have watched past videos. But I put that trend line in play several days ago, and once again, that's where the price got rejected. Sort of right here. The trend line let the price up above it and then just basically said, hey, just kidding. Down it went here, and then once again, down it went right here. The big difference here is that on this trendline rejection, it not only came down to these support levels, but actually broke down through it. But last 30 minutes here, you can see there is a bit of a green candle here that's forming. So that's where I'm going to just leave this as a support zone, because the price is still, generally speaking, right in this area. But this does bring about a very important and very interesting question. Is this the start of a much bigger breakdown to the downside? Now, to be fair, it's not. Maybe you're saying, what are you talking about, Clay? I think that it could bounce from that area. I think it could be heading back up. I totally see that rationale too. I see both sides. But the underlying dynamic here is that both sides could be forming trade plans around it, which, going back to, that's why risk management matters. Somebody's going to be right, somebody's going to be wrong. So make sure that if you're one of the wrong people, you're managing that risk. So that is a key dynamic, though, is that you have an interesting candle at the support zone. So is the price getting ready to just accelerate in this downwards pressure, or could it be getting ready to head back up here, maybe get a break through that trend line? Both are interesting situations. Both are certainly possible, but it all has to do with that support zone and how you want to potentially structure a trade plan around it. So that wraps up the top 10. Again, if you like what you saw here and you want to learn more about the tool, then definitely get signed up for the free live training. Or like I said, go ahead, drop me an email to clay@claytrader.com. All I ask is in that regard, because it genuinely is a live event, the event first needs to happen, then I have to get it uploaded, and then I'd be happy to send you, like I said, a link to it. But if you can make it live, then it'll be this evening, Thursday, February 9th, at 7 p.m. Eastern time, so I hope to see you there. As far as these top 10 videos are concerned, if you enjoy these, please do two things for me. Hit the like button, leave a comment below. Say hi. Tell me what you traded today. Tell me what you're watching tomorrow. Maybe did I miss something? Let me know if I should have put something on the watch list. But those two things communicate to me that you're enjoying, and as long as I know that you're enjoying, then I will continue to put in the time and effort required to get this content out to you. So again, get signed up for that class, drop me an email, and hit that like button, leave a comment. Thanks for watching.